Hey there, Jedi traders. David here of TradingFibs.com to bring you the index recap for June 26, 2014. As always, please seek financial advisement when trading with your monies. These videos are for educational purposes only to support your knowledge in the market, see what's going through my head on any given day. Please always make sure you have a solid trading plan and never move your stop when placing a trade. Well, what a day we had at the open. Here, our move of the day, play of the day, as some traders like to call it. From the open, the AD line starting out at the pivot, dropping all the way down to under negative 750 and actually making its way back up almost towards the same line at the end of the trading day. Here we had the daily gap in the pivot, which I call the typical no trade zone. So I will not typically enter a trade in there. If I am in a trade, prior to that zone, I will go in there, but do not usually like to take a trade. There was an exception here today, as we could see here at 10:30 Pacific Coast time, 1:30 East Coast time. There was a nice thrust up in price action up here all the way to the daily R1. So really the move of the day was right here at the open as price action came all the way down. We're looking at the Russell here. And again, we saw the same follow through on all four indices. I'll take a recap here and see what happened. Here we have the NASDAQ, same action from the open, market open here at 630. Here on the ES, we had the same price action. And on the YM, same price action coming down. So what does it take? Let's just jump right into the trade, the move of the day. What does it take to get into this trade? So if we zoom in here, the first thing we're looking for is we are looking for, on an 8 moving average, we're looking for a price signal that shows 1 bar close under. So here we have market open here at 630. We have a tighten this up over here. So here we have market open. We're looking for volume in the market. We have again, these are range charts, by the way. This is a 10-tick range chart. These are regular candles here. I have Heiken Ashi candles here on the right. Heiken Ashi's candles down here on the lower right. So I have the Russell, TF, 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 and in the lower left-hand corner is the RUT index. 534 EMA here on the upper right, 513.2180 on the lower right, and this is just an 8 moving average, something I've incorporated recently. That really, if I were to go, chart number 1 is up here in the upper left-hand corner. I'm looking for first bar closes underneath the 8 moving average. I'm looking for a second bar that's at least 5 ticks down from that. This confirms. So this here at 630, this would be my entry bar. If we look at the second bar here, the third bar, nothing continues down. It's the fourth bar, each previous bar. So let's go back. Our first bar here at 630, market open, closes underneath the 8-period moving average. Bar number 2, that's the trigger there, but the next chart that I want to look at is on my 534 EMA chart. If I come here and zoom in at the market open, and take a look at where we are at 630. At 630, we are still above, the 5 is still above the 34 EMA, so no trade yet. So I need to wait here. Zoom in here a little bit more. All right, so back to 630 would not have been the first bar confirmation. Second bar at 630, I'm not under the 5. 5 is not under the 34 until at least 6:32 Pacific Coast time. So if we go back here, my first bar trigger would have been here 631. That's a red bar close underneath the 8-period moving average. Second bar here is the trigger. 5 ticks down from there. I have a 5 under 34 EMA. So I have first confirmation that I'm underneath the 8-period moving average. I am now 5 under the 34. I take a look at the Russell Index. The Russell Index is flying down here all the way. So I have a confirmed big index of downward trend. What keeps me in the trade, Jedi traders? Simply Heiken Ashi candles, 5 under 34. All the way down through the first almost 30 minutes of trading. As we could see here, again, this is just on the Russell. Once I come down, I have a 5 under 13, 21, and 80, which keeps me in the trade even longer. What am I looking for? What downside target am I looking for? I can either manage this trade simply by allowing the candles to run, see if my candles come up and cross over the 34, or the 5 over the 13 can be an exit strategy. Or I simply come back and say, what are my real downside targets? I have a Camarilla pivot line. I have my average move down, which got hit today at 1160, what was it, 1168.8. And I have waiting for my 25-minute open range as well within that time frame. So again, a real nice entry on the Russell. First bar at the market open was a nice signal, but again, I was not 5 under the 34 EMA. As we can see here, I was still above at 6:30 Pacific time. It wasn't until 2 minutes later when I got another signal. Here is a close underneath the 8-period moving average. Go to the next bar. The next bar down here is my second confirmation. I'm at least 5 ticks down from there. I go over here. I am under the 34. Russell is in a downtrend. I'm confirmed to the downside. Taking a look at the NASDAQ, we had the same scenario, same setup. First chart we're looking at here is we're looking at the 8-period moving average. The 8-period moving average at the beginning of the session. Again, 25-minute open range here, wide open range today on the indices. Let's take a look at the first one. Would have been the first entry. So here we have market open. There is same setup. Bar closes underneath the 8-period moving average. This would have been the signal. At 6:30, looking for the second signal. Let's go ahead and zoom in on the Heikin Ashi bars and the 534 EMA. At 6:30, we're still above 5 above the 34. It wasn't until at least 6:33 that I had an EMA crossover. 5 crossing over the 34 EMA. We look a couple bars down. Bar number 1, bar number 2. It wasn't until at least 6:35 that we had a signal. Here we have a bar close underneath. Second bar closes underneath that. And then we have at least a 534 EMA crossover already. The NASDAQ NDX is already in a downtrend. And I already have starting to get a crossover that keeps me in the trade all the way down to the bottom of the open range. Same picture on the ES. As we look here at 6:30. Market open. 8-period moving average. Here we are, 6:30. We have a bar close underneath. Second bar at 6:30. Taking a look here at the 8-period moving average. Didn't happen until 6:32. So it wasn't until at least a bar later, or at least until 6:36 Pacific Coast time, I would have entered the trade and simply used the Heikin Ashi candles to travel all the way down. This keeps me in the trade. Solid body, tail down, 5 underneath the 34. 5 under the 1321.80 all the way down to the bottom range. SPX index is in a downtrend. And last, our YM, same setup. 25-minute open range here. It was 6:30. Market open. Bar closes underneath 8-period moving average. Second bar, third bar, fourth bar. Had numerous attempts here up until 6:32. Looking at the second chart for confirmation to the downside, it wasn't until at least 6:32 they had a 5 crossing over the 34. Takes you all the way down. 5 under 1321.80. We had a DJI, Dow Jones Index, that was also in a downtrend. Again, I don't use those to keep me in the trade. There's only one thing that keeps me in the trade. That is the Heikin Ashi candles together with the EMA crossover. As you can see, all the way down. And on top of all this, what was driving this? We had an AD line that was coming down, and market internals, which is what I usually will typically watch. I had a ratio of at least 2-to-1 on the NASDAQ, 2-to-1. First 3 tick bars in the morning were all in the red. Advancers and decliners overall was in the red, and I had an AD line that was also coming down. We had several other trading opportunities, which was really nice here. If we take a look at the overall day on the Heikin Ashi, just on the EMA, a trade also looking, we had a lot of morning chop session mid-afternoon here in the middle of the session that was hanging around, actually most of the day hanging around the daily pivot line, and the post 30-minute pivot here is shown by the white bar. I was not looking at a trade to go back into the daily gap pivot zone. Volume was pretty much low for the day. And so, but it did offer an opportunity if you had lined it up with the 8-period moving average. There was an opportunity to get back in the trade as price broke above the 8-period moving average. And looking here, you probably could have rode out the remainder of the day right here, starting about 9 o'clock West Coast time. You could see that the 5 broke above the 34, and that would have kept you in the trade throughout the most of the trading day. I'm sorry, wrong day here. Wrong day. Here we go. It wasn't until 9. It was it was around 9 o'clock. So you had a lot of side action. It wasn't here until 9, almost 10 o'clock, so 1 o'clock East Coast time that you would have taken a trade. This was, again, all in the daily gap pivot zone, a zone that I typically will not like to enter a trade into. Not to say that you couldn't trade it, but by all technical standards, it was a good setup as the 10-tick bar did cross over the 8-period moving average. So again, on all 4 indices, Russell, NASDAQ, ES, YM, all having really nice downside entries. Rules are really simple. Look for the close below the 8-period moving edge, or we're going upside. You'll look for the close above. Look for the second bar to close either below that or above that, depending on direction. Confirm on the 534 EMA or whatever moving average you decide. This is an exponential moving average chart. Check your major index to see what is the trend. Is it trending down? Is it trending up? And then again, if you want to keep yourself in the trade longer, instead of a 534 or use a trade management, as long as the 5 is under the 1321.80, just stay in the trade as long as possible, and then somewhere down at the bottom here, just move your stop as you go. One other thing I want to include that I didn't mention before, a big question I get in the sandbox trading room is, where do you place your stop at first? On the Russell, you got to give it some room. Typically what I'll do is, and I'll show you right here, is that right at the open, as soon as I enter, I will take, and this was a short, so if the entry was over here at 632, I could have done one of two things. I could have put my short stop right here at 1177.9, but I will usually take the high before the crossover. So that would have been up here, 1179.3, which is about 20 ticks away, which is a normal range for a stop on the Russell, maybe even 2.5, so 25 ticks. And as we could see, you could just manage that on the way down, just moving your stop, a trailing stop, and just keeping yourself in the trade using the Heikin Ashi candle. So really easy setup. Hope this helps. You can use this on any index or any market that of your choice. All right, that concludes today's wrap. Hope you got something out of that. Feel free to stop by tradingfibs.com, any of my social media outlets, my trading mantra. Hey guys, I know one thing, I know it well. I trade the TF. I watch the ES, I watch the YM, I watch the NQ. Always willing to share my trading plan and information with you. Keeps me disciplined. Whether you trade any of those indices, you can find me every day on Twitter at TradingFibs. And as always, I leave the crystal ball to the experts. I have my trading plan posted each night. Try and post as many videos as possible. I trade what's in front of me and on my charts. I have no clue where the market's going tomorrow. I base it all on what's in front of me. Hey, exciting news. My e-manual is in the process of being finished. I'm looking at opening up another trading room. So stay posted. I'll keep you abreast of that, and I'll tweet that out as soon as that's available. Hey guys, have yourself a great Blue Zone day. Peace. I'm out.